Yo, what's going on, you guys? Hope everyone's having a wonderful day today. I just got done putting in some work here at the setup, and I wanted to kind of share this video idea that came across with me. This week was a really exciting week for me as a coach and mentor as I began to re-strategize my client's approach to the market. Specifically because I was working with a very high earning individual that I just onboarded to SoCal Trading Group. And when starting with this individual, knowing how much capital he made, aware of his background, I wanted to make sure he actually avoided a lot of the mistakes that I've seen other clients make. And in my experience with coaching and mentoring, I've had countless lessons that I have noticed in my clients' performance, my clients' psychology, my clients' experiences with me, with even my way of coaching, my way of being there for them. I've noticed the flaws, the mistakes that I could have prevented in their trading and investing journey to have given them a better experience. And now, learning and being more experienced and mature, I wanted to make sure that this client left with a good taste in his mouth, and he was going to go ahead and get exactly what he needed to be able to become profitable trading in the stock market. And I wanted to go ahead and reflect with you guys those lessons that I learned, especially because it goes back to a lot of beginner traders as well. And it was a very interesting pattern to work with this guy and to see how similar we all are in behaviors. And it's a really interesting thing to notice, and I'm glad that I'm developing as a business owner, bettering myself as a coach and mentor to be able to spot these patterns. And they're pretty similar. I've seen them across countless of my clients, and despite us all having different backgrounds, different income situations, different thought processes and psychologies, our actions are kind of all similar. So when I was working with Frank, one of my good friends here, he wanted to essentially start learning how to trade. Now, this guy is just like any beginner, bro. And many of you guys are in this position too. You're just starting your Robinhood. You're barely learning how to use TradingView. You don't understand technical analysis and how to read a chart. It's very difficult and intimidating. This is kind of the beginner story of getting into stock options. So Frank was no different. Frank didn't know how to read the candlesticks on TradingView. He felt intimidated. He felt more confident in trading the line chart on Robinhood. So I was like, wow, like this is, you can't do much technical analysis on the line chart on Robinhood. Like, we got to work on getting him to adapt, right? And thankfully, Frank was here trading with me at the setup. So I initiated a Zoom call early morning, like around 7 a.m. Pacific Standard Time. We're on the phone, chopping it up. I'm introducing him to the fundamental analysis. I usually have a stream of I guess you can call him a informant, a reporter. He digests a lot of information coming from different resources very quickly to keep me up to date with pre-market news, opening market news, and throughout the early hour session, information that comes out, headlines. I'm always well on top of them. So I'm here, doing my best to transfer the knowledge into my client Frank, to give him the guide ropes of him, what to do when you're on your own. And one thing I notice is it's very common too. When individuals are learning how to trade stock options, when they're learning to get into something that they, understand the reward is behind, sometimes they kind of neglect the craft. Frank, just like many other clients, as soon as I introduce all this news, all this fundamental analysis, all this taking your key levels, his interest was very, very declining. And it happens. A lot of times people don't know how to, I guess you can say, apply themselves other than their day-to-day routines to be able to make this journey as a trader work for them. This is not a full-time job, but it does require a little bit of work to get the result. There's not much things that especially if you don't want to treat this like gambling. If you want to treat this like gambling, by all means, press buy and sell whenever you want and see how it goes. Yeah, you could do that all day. But if you're trying to build more consistency, more analytical approach to your trades and investments, unfortunately, you do need to gather some research. Unfortunately, you do need to be aware of the economic state of the global economy. You do need to know the political state of the country. You do need to know upcoming earnings. You do need to know upcoming partnerships. Extremely important data sets that are constantly being presented, and as a trader you need to adapt to. And I was transferring this information, but as I begin to tell him this is what you have to do, his interest is declining, and you can kind of notice that as an early investor, some people don't want that work. Some people just want the process automated. Some people just want to be told what's going on. Some people just want everything firsthand and made it easy for them. And that's really interesting, because my job here is to teach you everything it is that I do to be able to generate profits. But individuals are kind of a little bit, I don't know. I don't want to label them, but I noticed that when it comes to taking that accountability, that extra exertion to find and really make success and base yourself off analytical trades, it begins to decline. That dream of the trader, it doesn't really ring a nice bell anymore. A lot of people get into this because they want the money, when as a trader, the only way you're going to make money is if you're good at the craft. So yes, I want to highlight here in this video, this is a craft. This is requiring a lot of dedication. This is requiring an immense amount of time to gather information, to be well informed in these markets. Without it, the chances of you making money are very slim. So with that being said, as I'm sharing with this client, that was the first time I noticed, not necessarily the first time, but I noticed the rush to just press buttons and start adding more money. And this is where I want to step this into you guys as well. Frank is a very high performing individual. I'm talking about businesses doing well over $60,000 a month. So this individual, he's not afraid of $5,000, $2,000 positions. He's there, he's ready. And me, I had him start with $500. Why? Because I'm well aware of his financial situation. I've known him for quite some time, but hey, Frank, the lessons you're gonna learn with $500, I promise, are gonna be the same lessons you're gonna learn playing with 5,000. Now, of course, everyone's financial situation is different, right? But what I'm trying to highlight here, that's generalized for all of us, that's constant, is just because you have the excess capital, just because you have 1,000 that you don't care about, you have 10,000 that you don't care about, doesn't mean, let me go play with 10,000, let me go play with 1,000. Always, the money shouldn't be treated as if, I got this, let's make it into more. No, the money should be treated as a cost to learning and gathering experience. So minimize that cost that it is going to go ahead and minimize the capital exposure that it's going to cost you to learn these lessons, to learn when to enter, to learn how to manage a stop loss, to know when to trade certain setups, to know how to do your key levels and enter and exit off of key levels, to know how to maybe sometimes take a loss and it not be the end of your trading or investing career. Because when you go into higher capital, especially as a beginner, everyone's often, already, so afraid, so negative of losing, so easily discouraged of the losing. But when the winning comes, oh, they're happy, they're there, they're ecstatic, their expectations are out the roof for what they can make. But the second they start losing, oh, this isn't for me, oh, this is a scam, oh, this isn't real, all I ever did was lose money, and they begin to blame the market. That's not what you want to do. And I don't blame you guys. Learning how to invest and trade, getting around even computers. One thing I've noticed as well, people's technical acumen is not all there. Their ability to operate, computers, navigate Robinhood, navigate TradingView, it's not well developed. It's very intimidating, very hard to get into at first, and it feels discouraging. It feels like, hey, I'll never learn this. It takes time. Be patient with yourself and love the game, love the craft, love gathering fundamental analysis, love taking technical analysis, love doing research, love chasing the setups, love sitting at the charts to really put the best result for yourself than just not doing the work. You're gonna often find your experience in trading and investing a lot more profitable, a lot more exciting, a lot more fulfilling when you do the work behind it. And just like Frank, man, immediately wanted to kind of jump to adding more money. This is bad, because when you start losing $2,000, $3,000, you can discourage yourself for the rest of your life. And that's the last thing that I want you guys to do. When you're learning to ride a bike as a 4-year-old, bro, you're gonna get on that bike, go maybe 10, 15 feet, fall off, scrape your elbow, now you got a nasty scab, maybe another one on your knee, you're bleeding, hurts, crying, right? That 4-year-old, you think he's gonna wanna get on that bike again? Probably not. trauma, experiences were negative, probably going to be very discouraged to try again. That's the same thing as learning how to trade with a lot of money, learning how to lose money. People get discouraged, and it's very ironic. Why? Because when people go spend money drinking, when people go spend money gambling, hey, the negative is there, but they oftentimes get over it. Trading, investing in the stock market, I've noticed, is one of those things people don't get over with. People often do develop a negative connotation, a negative taste in their mouth around investing and trading once it goes south. So do your best to preserve your resilience. Do your best to preserve your ambitions and continue going. To do that, if you're losing half your life savings, if you're losing the vast majority of the income that you had put to the side for worst case scenarios, yeah, you're going to be very discouraged. But if you're losing now, $100, $200, money that, hey, I'm going to go spend on a dinner with friends, money that I'm going to go buy drinks with, money that, I'm going to go gamble with, that I'm going to, end up probably spending on gas or other things. Hey, this is better. This is nice. Now you could take some losses, get back up and try again. Maybe instead of falling off and breaking your arm, all you did was get a scab, to go back into that biking example. So protect your mindset. Protect, some people, yeah, they'll lose and they have the mindset and they'll continue to lose. Bigger the bets, bigger the reward. I will get out of this. And they do run into that pattern, that psychology of getting even, trying to beat the casino, right? That gambling kind of behavior does get incorporated when people begin to lose. And this is something in trading that you have to be extremely mature with, extremely disciplined, and extremely conscious of. I have had multiple times where I've caught myself injecting 5,000, 6,000, 7,000 after losing, just to try to, boom, the next day put a $7,000 position, make my money back, and come out on top. It's a pattern called revenge trading. I've caught myself in that countless times, and I've had to humble myself. Go to trading 1,000 to 10,000. My most recent challenge was $100 to $1,000. So as I developed to a trader, I've learned, and especially more as a coach, to start my clients from the bottom with less capital, money that they're not going to be emotional with. Let me go ahead and explain this a little more. So my client Frank entered a position on Friday. Google, we were entering puts and we entered at 10.07. So Google was at a range of 344 and she went up for 345 and a half a cent. So 345.50. We were negative in that position, roughly 60% the first 7 minutes into the trade. This was $500, all right? Of course, Frank has way more than that, but even then, despite having way more, his $500, he still cared about it. And he started to become more frantic. Jerry, you think we should sell it? You think we should get out of this? It looks like it's going up. I'm like, Frank, we've only been in this position 7 minutes. And this is very important too. As a trader, understand time awareness and theta decay. So if you're a more advanced trader, you know about theta and you understand that the longer you're in a position, the closer you are, the more usage you're using, and the closer you're approaching the expiration date, that value is going to decrease because there's less probability with less time until expiration. So me being 7 minutes into this trade, negative 60%, yeah, it was pretty frightening because of the volatility in the market. But I reassured Frank. I told him, Frank, it's 10:07 a.m. We have until 12. 11. We have until 11. We have until 12. We have until 1 p.m. You're going to be fine. Let it play out a little bit. But just here, just the $500, that franticness, that immediately loss of composure, the emotions, regulations, right? They're skyrocketing. You think if he was minus 60% on $100, you'd be scared? Oh, it's minus 60 bucks. Don't you worry, man. It's okay. It'll come back down. Less emotion, more composed, less care. This is a very important aspect as a trader that you want to develop. Risk management. Really only risk money that you're okay with losing. That's what's going to keep you grounded when trading, to be able to learn to think clearly. Oftentimes I see beginners get into this trying to pursue hot money, and yeah, to make big money in trading, Not going to say you always have to put bigger capital, but for the most part, you're trying to make, 50% on 1,000 and make $500 in 15 minutes, 10 minutes. Yeah, you do need $1,000 to, clear that much capital, because 50% on $100 won't make you $500. It'll make you 50 bucks. It's not that much if you compare the scale to capital. And all of us are trying to make living wages, generous money while trading. So yeah, if we understand the concept of exposing more than likely if our goal is to make the money, we will. But you don't want to follow that pattern. Not at the beginning. Please don't. At the beginning, allow yourself to risk less money, to be composed emotionally, to, hey, why did I enter this? I did my lines, I'm in front of my chart, I see this, I entered right here because of this. Cool. Wow, my position's negative 60% for 7 minutes. Okay, I have until 1 p.m. I'm all right, let's still in this. Hey, boom, now I'm in profits, now I'm in profits, now I'm in profits. Hey, plus 40%, I'm out. Yeah, it's not going to make you the living, it's not going to pay your car payment, it's not going to really do much for you financially. But now you're giving yourself that disconnection from the money to be able to learn, to be able to be present in the moment, to be able to understand price action, to understand, hey, you have time. The emotions and the psychology, extremely important when trading, because they are the reasons you're pressing that buy and you're pressing that sell button. They're the reasons that you're entering puts with the sell button and you're selling that position at the bottom. There's psychology and emotions that drive you as a trader to make these decisions. The better you can regulate those emotions and calm and compose yourself psychologically, that's where the money's made. That's where you compound on your, skill set, on your craft, on your experience to really get what you're looking for out of trading and investing. And that's a big tip that I see a lot of traders oftentimes expose themselves to. My clients, myself, have done it. So I want to share it with you guys because I caught it this month with this week because I caught it this week working with Frank, and the last thing I want you guys to do is to make those similar mistakes and lose money yourself. So those are just the two kind of those are just a handful of mistakes I see my clients and beginners make that I don't want you guys to fall into. And I just want you guys to have a little bit more of a guideline of how to approach the market to avoid losing and falling into these behaviors yourself. I gave all this advice to my clients, so I only feel it right sharing it with you guys to eventually help all of you. This is Jerry Trades of SoCal Trading Group. I hope you guys enjoyed the video. Leave a like and subscribe down below. Over and out.